Good evening or good morning, good whatever time it is you're listening to this. We are going to be going over the SPY datasets and earnings for the week of March 3rd, 2025. And with that said, let's go ahead and jump straight into the data. We have quite a lot of data this week. So on Monday, we have the global manufacturing PMI at 9:15 or at 9:45 a.m., so 15 minutes after open. Then we have the ISM data manufacturing data at 10 a.m. and that just includes, the manufacturing PMI, manufacturing prices, employment, etc., etc. We'll just go all over all those data sets as we, you know, see them. Not really expecting too much out of anything though. The forecast is seeing some of these numbers elevate slightly, but again, I'm not really expecting too much out of Monday's data. Now, Tuesday, we don't really have any data sets. We have Fed member Williams speaking, but it's so late in the day it doesn't really matter. On Wednesday, we have the S&P PMI. Then we have the ISM non-manufacturing data and the non-manufacturing PMI. So just again, kind of like Monday, we had a lot of the ISM data, only except this time instead of it being the manufacturing data, it's the non-manufacturing data. So Monday, manufacturing data, Wednesday, the non-manufacturing data. On Thursday, we have the weekly jobless claims. It's a standard thing. I'm not really expecting uh, anything too crazy. We did see a uptick in the jobless claims last week, but they're expecting the consensus is expecting a lower number, so overall, shouldn't really see anything too crazy. We really shouldn't see the numbers change too much over the next month and a half. But that could change. We will see. We also have the Atlanta GDP, and that comes out at 1 p.m. So that could definitely move the market a little bit on Thursday, but I'm not really anticipating any of this too much. It's usually going to be the jobless claims that are going to be the market mover, and that comes out in the pre-market. So we'll know if that's going to shift the narrative on Thursday or not. Now on Friday is a really big day as we have the non-farm payrolls, and if you hear me say NFPs, that's the non-farm payrolls. So we have the NFP data, we have the unemployment rates at, and that's all in pre-market. Then at 10:15 a.m. we have Bowman speaking. At 10:45 a.m. we have Williams speaking, and then at 11 a.m. So, basically back to back, just nonstop. We have at 11 we have the Fed monetary report, and this is a congressional type of thing. So we'll have uh, Powell speaking at 12:30 afterward. Um, but he's going to be doing a testimony in front of Congress. I don't know the whole deal about what they're really going over, but I'm sure everybody will be paying attention to that. But it's a single day testimony in front of the Congressional Monetary Committee or something like that. So we'll see how that goes. It shouldn't be anything too crazy. It's not like an FOMC speech or something like that. We also have consumer credit coming in at 1 p.m., but not really expecting, or at 2 p.m., but not really expecting anything too crazy out of that. Mostly, most of the market's going to be trying to pay attention to some of the NFP numbers, the unemployment rate numbers in the pre-market, and then what the Fed members are discussing with their speeches, and especially with what Fed Chair Powell says. So overall, it's going to be an interesting week for data, as we have some big data sets, but nothing too crazy. I mean, most of the big data sets are coming out on Friday, so we should be pretty set for the rest of the week. We do have some of these smaller one-off data sets, but um, overall, most of those data sets come out really early in the morning, so it's not like we're going to get some surprise uh, pulling up on us during the later day. I forgot to originally bring this up when I was going over the data sets, but on Wednesday we actually have the beige book later in the afternoon. That's an extremely important data set for me because what the Beige Book does is it's the Fed members in each of the central banking areas, uh, or each of the central banking districts, and they go out to businesses in those districts, and they basically get boots on the ground data. So they ask the businesses how they're doing, how the employment's going, how the hiring's going, how the firing's going, how are our customers going, and just things like that. So it gives you a lot of data on whether they're starting to see weakness, whether they're starting to see consumers starting to fail, or whether the labor market's starting to fail. It tells a lot, but a lot of people don't pay attention to it just because you're having to read a fairly large data set. So it is a very big one, and this is something I'll be going more into as I discuss treasuries and TLT. It's been a while since we've had a beige book report, so having that for the new year is going to be, pretty important, and it's going to show kind of what the Fed is looking forward to in the future. Now, going over the earnings this week, we don't have anything too crazy, but we do have some that I'm going to bring up. So we have AST Space Mobile on Monday in the aftermarket or in the after hours. I know some people are looking towards plug and maybe even SMR, but I'm mainly looking at ASTS. I don't know if I'll play it or not. I might. The contracts are pretty cheap and it moves extremely well. So yeah, I might go into something on that. If I do, I'll post about it. Tuesday, there's Target in the pre-market, and then we have CrowdStrike in the after hours. CrowdStrike is a bigger one. It can move the market, but not really anticipating anything crazy out of that. Wednesday, we basically just have Zscaler, and we have I'm gonna butcher this name. It's either Rigetti or Rigetti Computing. We all call it Rigatoni. So Rigatoni is on Wednesday. That one, a lot of people are going to be playing very likely, so I might do a TA on Quantum later this week. We'll see. Then on Thursday, we have Broadcom, so Avgo. That's a really big one. That could basically determine whether semis or semiconductors are going to start rallying again, or if they're gonna all start dumping again. And then we also have Costco. I won't really be playing Costco, but I might play Broadcom. We'll see. If I do, I'll post about it. Then Friday, there's nothing. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. And getting right into the technical analysis, let's go ahead and open up the moving averages and the Bollinger Bands and discuss those levels. And I want to open this up just a little more. Alright, so we have the 5 mile currently at 593.04. The SPY closed at 594.18. So it's very likely we're going to see the 5 mile pull up towards the 593.40 mark, give or take. Basically, the overnight market is sitting right at that area, that 594 area. We have the 10 mile at 697. We have the 20 mile at 602.28. We have the upper Bollinger at 616.44, and then we have the lower Bollinger at 588.12. Now, we had kind of like two lower Bollinger moves happen, and we had this first one start, and it kind of broke out. Retested the 5 mile there, as you can see, the 5 mile in the green. It tested that level and basically rejected, pulled right back down and did another bottom Bollinger move. Now, I consider this two different bottom Bollinger moves. I don't consider this like an extended singular move. So we treated Thursday as day one of the bottom Bollinger move, and then Friday we treated it as day two, which meant that we were expecting a lower low, which we got, and we were going to buy that low and basically buy all the way up. And many of us did that. Many of us were able to take calls all the way from the bottom all the way to the 594 that day, and it was one of the most profitable trading days I've seen in a while. So very, very good day. Um, but what this does is that this breaks us out of the or out of the bottom Bollinger, and it brings us back to the 5 mile. Now we're already at the 5 mile. So what happens from the 5 mile is either we test the level and go back to the bottom Bollinger, or we head up to the 20 mile. Now, very likely, since we've been in the bottom Bollinger selling range for such a long time, I mean, just look at the volume. We've been selling for a significant amount of time. It's very likely we're going to start heading back upward toward that 600 level to retest some of that upper support. And on Friday, I originally was mentioning that 592 level, and I believe the 5 mile was at 592.60 something at that time, which I mentioned that if we do hit that original 592 target, that we're going to get the 5 mile very likely happening either that day or on Monday. Well, that's why we ended up going from testing the 590 area all the way up to 594 on that Friday session is because when you test a moving average, usually you go $1 to $2 above and below that range. So with the bottom bull or with the 5 mile at 592 area, it gave us that whole move all the way up to the 595 essentially and down to the 591, which we saw that tested later in the day. We can actually see that probably on the let's check the 30-minute chart. That'll show us a little better. Yeah, I mean, we see it tested right here. So we pulled up towards, the 591 area, hit that 594, pulled down. Yeah, really good consolidation in there. Formed a cup right there, and just, continuing to build it out. So it looks like we're building some really strong liquidity here, and what I want to focus on is basically starting to look upward. And the reason why we could start to look upward is because, as I mentioned, we had we had the bottom Bollinger move already happen. We already had the move out of it, which that's something that we anticipated happening. We already had the 5 mile slightly tested in this area, which that's the next move after the bottom Bollinger move is to have the 5 mile tested. And we now have the 20 mile sitting basically right above this cup. So I want to draw this out. That's my drawing from last week. Kind of played out, but just on a smaller time scale. I was looking more towards something like that. Anyway, that's interesting, but that's kind of also something I'm looking forward to right now, so it still holds relevance. Anyway, I'm gonna keep that drawing because it's actually pretty important still. But what we're looking forward to here is now we're going to get this cup filled. Okay, and the top of that cup, let's check the 30-minute time frame just for a little better picture. The top of that cup is going to be around the 598.68, so that gives us pretty much right to the 10 mile tomorrow. If we do test this level tomorrow, right, then that would be right at the 10 mile. Now, if we go to the 20 mile, that pulls this cup top up to, let me see, is this going to let me edit it? No, it's not. Okay. Well, that pulls the cup top basically to this 602 area, which that can definitely happen. Usually for a cup top, we're expecting the range to be hit, so we're expecting that top of the cup to be hit. And then from this area, we want to see a structure start to build, which very likely is going to be a head and shoulders or some other bearish liquidity, which will then pull us down. So it's going to move us up and pull us downward and build a handle. Now, that fits really well into this larger inverse head and shoulders we got going on here. And in my opinion, it's extremely likely this is going to happen. So if this does happen, then what we should be looking forward to, and I don't know if it's going to exactly be at this 589 area. I'll discuss how to find the bottom of this handle a little better in a little bit. But what we should be looking for is for a bullish structure to break us out. And this will be what will take us over the next gap. All right, so that next gap is looking at that 604 area. So very likely we're going to sit here and form some liquidity in this area as we start to get some of these data sets in, get some of the more important data sets coming in later this week, which could pull us up to this area. Um, but very likely we're going to form the top of that handle over the next couple trading sessions. Pull down, form some support, and it could happen right in this 594 area. As you can see, there's quite a lot of support built right there, so that could build a really nice area for essentially, let me redraw that one, essentially a large, inverse head and shoulders type of thing to form right here. Give or take, to form that breakout. So with that said, kind of look for those structures to form right now. I'm not really looking forward to, or I'm really not looking down too much from here. If we are going to head downward, then what I'm looking forward to is for this cup top to kind of break. So I would look for that to be a left shoulder, look for this to be a head, and then a right shoulder, create this, and then as the the bulls and the bears are farming liquidity, this would break down, right? And then it would invalidate that cup, and we would not get the bull structure. So we would not see, the inverse head and shoulders here. We would just see this basically be broken through, not give us that breakout upward, and take us back down towards the bottom of that consolidation channel. I don't think that's going to be the case. I do think that we are going to get the pretty big bounce here. And between just how the SPY is positioned and how, or in what's going on with Bitcoin right now, I mean, Bitcoin, I believe, is up either 9 or 10% right now. Let's take a look really quick. It's up 8.4%. So it's, all the way up to 92. It was up to 94,000. And Bitcoin's been actually tracking the market really, really well. So if that's bullish, it's very likely we're going to see the SPY and tech being bullish. And the reason why the market has been tracking Bitcoin a little bit more is that there's been so much institutional buying behind Bitcoin, and a lot of those institutions are the ones that drive the rest of the market prices. And I don't say that in like a conspiracy way. It's they're the dealers. They're the ones that drive the prices of, the underlying, and they do that by buying and selling shares or assets, whether it's crypto, whatever, bonds, into the market and drive the price. Well, if there's now trillions of dollars of institutional funds behind Bitcoin, then that means it's now a monetary asset that can be driven in price. Um, and that means that they need to control that price being driven one way or another. So they've been taking it a lot towards the market direction recently. It used to have an inverse correlation with the dollar, where if the DXY was moving up, the Bitcoin would be moving down, vice versa. It no longer holds that relationship anymore. It's now basically just a forward indicator for SPY and tech overall. If we're having a really, really good day in Bitcoin, it's extremely likely we're going to have an extremely good day with, tech and everything else. So with that said, um, we should be seeing a lot of this structure heading upward. We should see, you know, some of these big gaps being filled up, a lot of these smaller cups being taken, building liquidity to head upward, kind of like that. Build more liquidity, and continue forming to head up. Very likely we're going to see this larger cup fill out towards the 613 and break this upper consolidation channel. I don't know if that's going to happen this week, but this week is very likely going to be the start of, this upward trend. Very, very likely. So with that said, we will go ahead and end the video here. I don't want to rant too much, but we have very important data sets this week. We have decent earnings, nothing too crazy. We do have Thursday like Broadcom and Costco, which can be bigger, but overall the earnings shouldn't move us too much. The data sets are they can be mixed, but overall I think the data sets are going to push the market upward. Powell's testimony shouldn't be anything that should be causing concerns of, you know, uh, significant inflation or deflation, anything like that. It's just going to be a Congress testimony. So, yeah, we'll see how this week goes. Overall, I do expect things to get bullish. I do expect this liquidity right here. I mean, you could see it very clear as day. There's just a huge patch of liquidity right there, and it's very likely they're going to build that right in this area too. And why would you do that? You would do that to push upward. So that's the thesis for now. We'll determine if this is correct or not later in the week as we get, some of these trading sessions and data sets coming in. With that said though, I'll go ahead and end the video here. I hope everyone has a great trading session this week and have a great day today.